Welcome to the Market Rundown. I'm Matt Bennett, grain marketing consultant with Channel, and I'm here to recap the October WASDE report, the supply and demand. Basically, we came in today with the USDA showing us what updated yield forecasts are and what supply and demand looks like. And so when we look at this, the top three things that I want to look at, of course, is going to be what did corn production look like, which actually came down just a shade, and the carryout levels came down as well. Soybeans, same type of thing. Soybeans, the yield came down, carryout came down. Very interesting that both of those came down, being that the trade wasn't expecting that. And then the third thing, of course, is going to be, hey, what did this report mean for us? I mean, we've had some pretty rough markets here of late. So I want to recap kind of how I think this could affect us moving forward, especially as we traverse through harvest here. So first of all, let's look at the corn report. I mean, in essence, the main thing that changed here, of course, is going to be the fact that USDA lowered yield. So last month we were at 173.8. This month we're at 173. Now the average trade guess was for not much change to happen at all. And quite frankly, whenever you look at that yield changing, it brought the carryout level down to like a 2.111 billion bushel level, which is actually a couple 100 million bushels below what some folks have thought over the last couple months. The September quarterly stocks report, which showed us the ending stocks from this last marketing year, kind of tempered those expectations, brought carryout levels down somewhat. And so actually the 2.111 wasn't that far below the average trade guess, but by all means it was below. World numbers were below as well. So the corn report was definitely considered, friendly. Whenever we look at the soybean situation, yield came down. Actually, 50.1 is what the yield was this last month. You come in here this month, you're 49.6. I mean, that's actually a pretty good little drop. And so it brought your carryout levels down. Right now you're looking at like a 220 million bushel carry. And that is actually, 30 to 40 below what some folks had thought just again within the last couple months. And so as far as the bean report was concerned, the world numbers were actually very friendly as well. We brought from 119 million metric tons down to 115. And so, the bean report was considered friendly as well. So what does this all mean? I mean, as I put this video together, essentially the markets reacted favorably as one would expect. At times the market was trading anywhere from 5 to 7 cents higher for corn not long after the report was released, whereas beans raced up 20 and then 30, 35 cents higher. And so obviously the initial reaction is one that's very positive. I think one thing you have to keep in mind is that, these carryout levels are very snug as far as soybeans are concerned. For corn, it's still above 2 billion. And so moving forward, we have to understand that you could face some headwinds whenever it comes to corn, not only on the U.S., but the world stage. But as far as soybeans are concerned, you've got a very interesting dynamic that continues. I've talked a lot about in my marketing updates is that it's extremely tight carry as far as the U.S. is concerned, but the world numbers are still actually, bordering record levels. And so, it's going to be an interesting market. I don't think it's one that we can go to sleep on. I don't think it's one that we can just sit here and think that the market's going to be stronger on farther down the road just because it's stronger today. So we have to be very cautious there and still keep our risk managed as much as possible. So once again, the 3 points that I'd like to recap with today's market rundown is that, the corn report was a friendly one based upon yield, based upon stocks. Soybean report, same thing. Based on yield and stocks, we actually had a very friendly report. And then the third thing is that it was a very favorable reaction initially, but we want to be cautious moving forward and make sure that we look at, our markets as sometimes take the gift that's in front of us instead of waiting too long on something that might not ever show up. So once again, this has been Matt Bennett with the Market Rundown. If you have any questions about the video or anything that I said here, you can post them at the bottom here, or actually you can sign up for the newsletter on the website and be able to correspond with me there. So thank you for joining us today.